Hello everyone and welcome back to the Velocity channel. Listen, we have a show for you today. You can probably already tell it's about to go down. We are your bridge for financial freedom, and we're going to show you how to take your liability and turn it into an asset. That's right. We're going to show you how to take your credit cards, your lines of credit, the things that people call bills, and we're going to show you how to turn that into an asset and pay off all of this. I'm talking about credit cards, your house, your car in way less than 30 years, way less. All right. Now, before we get into that, please like, share, and subscribe so that people all over the world can know about Velocity Banking. Folks, this will work with oranges, it'll work with dollars, it'll work with bananas. You just got to have the right mindset. We're going to show you that right now. So first off, I just want to let you know that more and more people are looking into Velocity Banking. And what is that doing to the banking industry in turn? Well, it's forcing them to add more products to their service line that will cater to Velocity Banking. So folks, I just want to say a big thank you to you because you are changing the banking industry. Please continue to do it. Now, behind me, I have normally how our income is divided. I'm not going to put the names up there. I'm just going to say, this can represent the mortgage, the car loan, $600, the minimum monthly payment on our credit cards, and $2,100 that can represent groceries or lifestyle expenses. And then the $500, well, that's going to represent the savings. And this is normally how the income is divided up. Divided. That's the first mistake. Dividing up the income like that is not what we want to do, okay? Especially when we're talking about Velocity Banking. So when we do this, what we're doing is we are actually decreasing our cash flow, which means $1,200, $600, $2,100, and $500. Well, if we're making $5,000 in income, then what's our cash flow? Well, isn't this $5,000? Yeah, our cash flow is essentially zero. So what we want to do is we want to go ahead and change that so that our cash flow is more than zero. We want to be above and not beneath, and I'm going to show you how to do that right now. So here we have a graph to further illustrate the power of Velocity Banking. So we already established that our credit card has an $18,000 limit. We have a $16,000 balance, 16.5% annual percentage rate, right? It's going to be more than that. But anyway, $600 minimum monthly payment. And so that's where we are right now with the credit card. So we're going to start there first. Some people call it a liability. I call it an asset, especially when you can use it like one. So we're starting with the balance, which is $16,000. But where are we putting our paycheck, which is $5,000? Remember, where are we putting it? We're putting it inside of the credit card. And so what happens when we do that? Now the balance is at $11,000, right? Because 16,000 minus 5,000 is 11,000. However, we still got $3,900 in expenses. So we got to add that to that 11,000, and that's going to bring us to now our balance is $14,900. But notice something. $14,900 is less than 16,000. So what are we doing? Where is that $1,100 in cash flow? What is that doing? It's paying the balance down. That's what it's doing. And so as this $1,100 pays down the cash flow each and every month, look at what happens to the balance. It's going down to 13,800 and so forth and so on. Do you see what I'm saying? And so let's go ahead and take a further look into that and see how much interest we're saving. Now, here's where the real power of Velocity Banking comes in. We're going to take a look at the monthly interest payments, right? And then we're looking at the interest rate, which is the 16.5, remember? That's the balance, which was 16,000. This is the number of payments made, 14 and a half. And then these are the months in the year, 12. If you add all this up, which I'm not going to make you do, don't worry about it, okay? But you know I like math. It's going to be $3,190 in interest. That's the interest that you paid. But CJ, what about if I paid the regular way? $600 a month. Well, what would that interest be? I'm glad you asked that. Because if you were to pay the regular way, the normal way, right? Remember, you don't want to be normal. You would pay $9,133. But not just that. It would be $9,133 over 15 and a half years versus 14 and a half months. Because you see, with the velocity banking, you've paid that off in 14 and a half months, not 15 and a half years. So now that the credit card is done, let's continue. Perfect. Now our cash flow is at $600 when we can do a whole lot with that. And listen, if you had the automated velocity banking system, you would already be doing a whole lot with that like we are doing. However, $600 cash flow. Congratulations. What can you do now with a card of $18,000 is your limit and you have a $13 balance on your car loan? I wonder what we're going to do. Hey, we're going to pay that car off. Yes, absolutely. And I know technically you're not paying the car off. However, you're going to go ahead and you will switch this loan out with the line by taking that $18,000 limit that you have and just paying that off. That way, you would get rid of this. Which means now that $600 that you were paying each month to that car loan is now part of your cash flow. So you're controlling more of your cash flow now. Does that make sense? So this is what it is. You're done with your car loan. Now we're going to go ahead and pay off that card again. You already know how that works. And oh, by the way, by doing the velocity banking, you're going to pay that card off in about 7 3/4 of a month. Remember, you've added cash flow to the card, right? So since you've added cash flow to the card, okay, now you're cooking with Crisco. Now you're cooking, okay? Why? Because we forgot something. Why do we not have a savings account, at least in a bank? Because of inflation, okay? And if that does earn interest, they're taxing you on the interest, right? Okay, so let's go ahead and put our savings to work for us, all right? Who needs a savings account when you got a credit card, all right? And you know how to use it correctly. So now we have $1,700 in cash flow. That's why we're able to pay the car and the card off. Remember what we did? We did the switcheroo there. In 7.75 months versus years and years. Okay, the more cash flow you have, the faster your debt pay down. Now, when you're done with the 7.75 months, what is it time to do? Yeah. So we got, and we most likely are going to have a credit limit increase, but we'll just keep it here just in case. Now, we are going to attack the mortgage. Absolutely. The last one on our list. So let's go ahead and attack this mortgage here. You see, what we did in the beginning was we got rid of all the bad debt on the cards, okay? Remember, credit cards and credit lines are supposed to be used as assets, and that's what you're using it for right now. So let's go ahead and take the $13,000 because we paid the car off and the card off. Let's take that $13,000 again and make the chunking payment towards the house. And I'm sure you already know how to do that. So folks, that's how you do it. That's how you use the credit card or your credit lines as leverage, as assets. That's what they're supposed to be used for. So if you have any questions, matter of fact, you may have this question. CJ, wait a minute. I can't pay my car off. Let's go ahead and address it. With a credit card, yes you can. Watch this. What do they send you in the mail when you've been good at making your payments? Access checks. And you can pretty much use them for whatever you need. All right. Folks, if you have any questions, don't hesitate. Give me a buzz. Absolutely. Like, man, you know what? Let me do this. 520-200-2363. Give me a buzz, man. There's been a lot of people that are looking to go forward, and so we might as well go ahead and give you the number, all right? God bless. Have a great one. Don't forget to like, share, and subscribe, and we'll see you soon.